Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Li Ning Company Limited annual report. Li Ning Company Limited offers a wide range of businesses and services that cater to various aspects of the sports industry. At its core, the company provides sporting goods under the Li Ning brand, including professional and leisure footwear, apparel, equipment, and accessories. In addition to its flagship brand, Li Ning also develops and markets products under other brands such as AIGLE for outdoor sports, Double Happiness for table tennis, and Casson for badminton. This diversification of product offerings enables the company to tap into different market segments and expand its customer base. Beyond product development and marketing, Li Ning Company Limited provides various services including brand licensing, administrative support, research and development, and property management. The company also operates a network of retail stores across China, comprising conventional stores, flagship stores, China Li Ning stores, factory outlets, and multi-brand stores. Overall, Li Ning's business scope is extensive, covering product design and manufacturing, marketing and distribution, retail operations, and supporting services that enable the company to maintain its position as a leading sports brand in China. Li Ning Company Limited market capitalization of 55 billion is significantly larger than the average industry peer of roughly 2 billion. This shows that Li Ning Company Limited holds a significant advantage in their industry. Li Ning Company Limited trades at a higher price-to-earnings ratio of 17 times and a higher price-to-book ratio of 1.78 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 27% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 3.45%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the provided summaries. Revenue growth is primarily driven by strong sales of flagship products, successful new product launches, technological innovation, and effective marketing campaigns. The company's ability to expand its product matrix to address diverse consumer needs has also contributed to revenue growth. In addition, the integration of global event resources, event marketing, and star endorsements have boosted revenue in specific categories such as basketball. The introduction of new products, targeted solutions, and recognition among core sports consumers have driven sales in the badminton category. Furthermore, technology-driven innovation, IP collaborations, and trend-driven marketing have contributed to revenue growth. On the other hand, revenue decline is primarily attributed to sluggish demand and soft sentiments in the property market in Chinese mainland and Hong Kong. The decrease in interest income due to a decrease in interest rates has also contributed to revenue decline. Additionally, cash-based expenses, including marketing costs and tax payments, have risen, leading to a decline in revenue. Overall, the company's ability to innovate, expand its product offerings, and effectively market its products has driven revenue growth. However, external factors such as changes in the property market and interest rates have contributed to revenue decline. The net income of the company experienced a fluctuation over the period under review. Initially, it increased by 9.9% on page 1, reaching RMB 12,936 million. However, this trend was short-lived as it decreased by 2.6% on page 21 to RM935,743. The decrease continued on page 27, where net income dropped from RMB 3 billion, 12,918,000 to RMB 12 billion, 935,743,000. The profit margins of the company also underwent a change during this period. The gross profit margin declined by 0.4 percentage points to 49% on page 1 and remained at 49% on pages 21 and 25. On the other hand, the net profit margin increased by 9.9% to 9.9% on page 1, but decreased by 0.6% from 10.5% to 9.9% on page 21. The reasons behind these changes can be attributed to several factors. The impairment charges of RMB 169 million, 20,000 recognized against investment properties on page 27 contributed significantly to the decrease in net income and profit margins. Additionally, the decrease in interest income due to lower interest rates on page 27 further exacerbated the decline. Furthermore, the increase in effective tax rate from 26.7% to 29.9% on pages 21 and 27 also played a role in the reduction of net income and profit margins. The company's financial performance indicates a strong ability to generate cash from its core operations. As evident from the provided information, the company has consistently demonstrated positive operating cash flow over the past year. On page 1, it is stated that the net operating cash inflow was RMB 4,852 million, showcasing a significant influx of funds into the business. This trend continues on page 29, where it is reported that the company's net cash generated from operating activities for the year ended 31 December 2025 was RMB 4,851,532,000. Furthermore, page 30 highlights another key factor contributing to the company's positive operating cash flow: the net proceeds from the top-up placing of HK 10,433,042,000. This substantial influx of funds has undoubtedly played a crucial role in supporting the company's financial performance and enabling it to maintain its positive operating cash flow. In conclusion, based on the provided information, it is clear that the company is indeed generating positive operating cash flow, which is a testament to its strong operational efficiency and financial management. Management is expressing cautious optimism about the company's outlook. The challenging property market environment in China and Hong Kong poses a risk to investment properties, but management remains focused on long-term growth strategies. Key initiatives include expanding into new product categories and international markets through strategic acquisitions. A significant investment of RMB 3.3 billion will be allocated to establishing a high-end manufacturing base and research center in China. This move is expected to drive innovation and improve supply chain efficiency. The company's strategy also emphasizes the integration of sports and lifestyle aesthetics, with a focus on technology-driven product upgrades and innovation. Management aims to strengthen its professional brand image and deepen emotional connections with customers. By seizing opportunities in China's domestic demand potential and adhering to its core value of serving the public with sportsmanship, the company seeks to become a trusted and preferred professional sports brand. Overall, management is committed to driving growth through strategic investments and innovation, while navigating the challenges posed by the property market environment. The company has a history of paying dividends, with two notable instances in recent years. In 2025, an interim dividend was paid at a rate of RMB 33.59 cents per share, as stated on page 14 of the extracted summaries. Furthermore, a proposed final dividend for 2025 is also mentioned, amounting to RMB 23.36 cents per share. These figures indicate that the company has prioritized returning value to its shareholders through dividend payments. That concludes the financial summary for Li Ning Company Limited. Feel free to comment below, and I will be happy to answer them when possible.